Good morning, Professor. Here Satvir Gorgil. My student ID is 20173363. Here I would like to explain our group assessment that is based on the Create Our Own business model. There are my team members Navdeep Kaur, Samneet Kaur, Preeti Beti and Shilpa. They'll explain their I student ID in the next slide. First and all, I'll explain my business with my team members. Here the name of our business, that the company name is Burger and Bite, which sells the variety of the burgers. In this slide, I'll explain the idea of our business that is based on the burger. As the burger is the highly demanded in the people, the burger is more common in the market and which is the world best and instant food to eat and make. The children, no matter what the number of the age of the people, but they love to eat burger. As children, the young ones and the old ones, everybody love to eat because it's easy to eat as well as easy to make. The business will be incorporated on 15th Feb 2023, and there are the many resources which are needed to operate this arts business, and the resources will be human resources, machines, raw material to make the burgers and the vegetable, etc. As I already told that our business is based in Australia and it's door-to-door services, and the first in this thing I'll explain that the financial need of our business, that is the detail of financial status, that's it's depend on the cost is 48,000 and overall fixed cost of this business is 48,000, and that means even break-even value is 0.67. As everybody knows that the crucial value of the business is the budget. The main word is the budget of any business, which is decided already by operating a business, and finance is the basic need of any people to operate a business. The fixed cost and the variable cost are the two main types of the cost in any business can occur when producing goods and services. The businesses use fixed cost for expenses and they remain constant for the specific period such as rent or a pay loan, while a variable cost for the expenses that change the constantly such as taxes, labor and operational expenses. In the meanwhile, the fixed costs are generally easier to plan, manage and budget for than variable cost. However, as a business owner, it is crucial to monitor and understand how both fixed and variable cost impact our business, and they determine the price level of the goods, services and
Definition of a burger: a thick, juicy beef patty, cheese losing its hard edges as it melts over top, a slathering of sauce, a spoonful of tangy relish, and a couple of slices of smoky, salty bacon, a bit of onion, some tomato, and crisp lettuce, all tucked between two halves of a bun. It is all the things everyone wants. Firstly, the product cycle is defined. There are requirements of many things to make a burger. The sauces, vegetables, spices, and the buns are needed for the burger. In the starting of the business, only burgers will be sold. After the establishment of the business, new items will be introduced. These burgers will be healthy and people can buy them easily because of its low price. It is good and healthy to eat. It will satisfy the need of the customers. These products will be available every time. The customers will love to eat this product.
Hello everyone, my name is Samneet Kaur and my student ID is 20173395. Here I would like to describe about the varieties in burgers. In our business, different variety of burgers are available at many different prices. Regular burger is $5, cheeseburger is $8, peri peri burger is $7, XX burger is $8, jumbo burger is $9, and deluxe burger is $10. Sales budget CVP. CVP analyzes at the effect of sales volume variations on cost and operating profit. The analysis is based on the classification of expenses as variable expenses that vary in direct proportions to sale volume, or fixed expenses that remain unchanged over the long term irrespective of the sales volume. Accordingly, operating income is defined as follows: operating income, sales, variable cost and fixed cost. A CVP analysis is used to determine the sales volume required to achieve a specified profit level. Therefore, the analysis reveals the break-even point where the sales value yields a net operating income of zero and the sales cutoff amount that generates the dollar first of profit. Cost volume profit analysis is an essential tool used to guide managerial, financial, and investment decisions. Break-even point is equal 0.67, margin of safety is 0.33, fixed cost will be covered to 0.67.
A sales budget is a financial plan that estimates a company's total revenue in a specific time period. It focuses on two things: the number of the products sold and the price at which they are sold. To predict how the company will perform, the sales budget is planning a tool that allows companies to manage the resources and profits based on expected sales. It takes into account the previous sale patterns and budgets for similar time periods so that each department can have a big picture idea of where they stand financially. This helps companies to be more efficient in reaching their goals and maximizing their profits. The per unit value of a burger in every month is same as $10. The annual units are sold is 12,000. The demand for the burgers increases in every one, but in the middle of the demand decreases. The total revenue is 1,11,000. The purchase budget holds an important place in the business as it allows the owner to effectively analyze the inventory within the company's larger overall budget framework. Planning a material purchase budget requires that the owner look at the past performance to determine future needs, establish a break-even point, perform cash flow analysis, and project earnings. As the business grows, the number of employees often grow. A purchase budget that contains projected employee levels will help ensure adequate inventory amounts as more employees sell the product. A purchase budget also helps the company to prepare for increase or change in product lines or new product launches. The total variable cost is 50,360. The total cash payment is 48,472. This budget is maintained to know about the total budget of purchases. In the last month of the year, the business is achieving profit. The total sold units are 12,000.
Income statement. The analysis of the income statement involves comparing the different lines items within a statement as well as following trend lines of individual line items over multiple periods. This analysis is used to understand the cost structure of the business and its ability to earn a profit. The net profit is 21,640. The gross profit is 69,640. That companies should track and analyze to determine the liquidity and the solvency of the business. Cash flow from the operating activities, cash flow from the investing activities, and cash flow from the financing activities. All three are included on a company's cash flow statement. In conducting a cash flow analysis, businesses correlate line items in those three cash flow categories to see where money is coming in and where it's going out. From this, they can draw conclusions about the current state of the business. Depending on the type of the cash flow, bringing in money isn't necessarily a good thing, and the spending money isn't necessarily a bad thing. The closing balance is 65,268 and the issue shares are 200. The investment is made of 200. The net cash from the operations is 65,168. Net cash from the investing activity is 200. Net cash from the financial activity is 200. The closing balance is equal to the operating plus net cash flow. Thank you.